Hi, everyone. My name is David Kosmeter. I'm the creator of TimingResearch.com, and this is Crowd Forecast News, episode number 164 for December 11th, 2017. We will be discussing the 220th weekly report. So if you haven't had a chance to take a look at this yet, you should be seeing it on my screen on your screen right now while I'm talking, but you can also go to TimingResearch.com to download the full PDF there. For those of you watching live, the live chat is enabled on the YouTube page, so feel free to enter any questions or comments along the way. And I have Dean Jenkins back to moderate today, so I'm going to go ahead and turn it over to him.
All right. Hey, thanks, David. It is good to be here, and got a couple new folks on the panel that I haven't met before, so I'm excited to get to know them and hear their inputs on the markets and some trading ideas. And so let's go ahead and start off by having each of the panelists just give a short 1 or 2 minute introduction of themselves, who you are and what you got going on. And we'll go ahead and start with you, Rob.
Hey, everybody. Thanks for having me on, David, and it's good to meet everybody here on the panel. I'm Rob Booker, and I'm happy to be here. I don't know what kind of introduction you wanted. I hope that was all right.
What kind of trading do you focus on? What's your specialty there, Rob?
I'm a currency trader, primarily robotic trading, actually, not discretionary, and 100% the currency markets.
100% in currency. Okay, interesting. Interesting. So we're going to ask you about the S&P. You go, I don't care, man. I'm focused on currency. Right?
Well, I'm happy to. I love this. I love this research report. So I'll definitely took a look at the S&P in anticipation of our time today.
All right. Excellent. Excellent. It's good to meet you, Rob. Hima, good to be here with you for the first time. And if you just take a minute to introduce yourself, it'd be awesome.
Sure. Thanks, Dean. Can you guys hear me okay?
Yeah, it's great.
Yep. Can you hear me? I just turned back on, want to make sure.
Yeah.
Okay. So hi, everyone. Hima Reddy here. I am a technical analyst through and through. I have worked with all markets, but now these days I focus on the E-mini S&P, E-mini NASDAQ, and related mini futures. I provide daily research and I provide education around it, workshops, courses, indicators, etc. So I've been doing this for over 15 years. Not all of the time was I running my own shop. I worked as an investment banking analyst at a technical research department and for an independent research firm. So I know the Wall Street side. I think I know the Main Street side pretty well. And I think that's come together to take a approach to the markets. So happy to be here.
Okay, great. It's good to meet you again. And I like you said, I'm a technical analyst, and boy, I am too.
Okay.
After flailing for years with fundamental analysis, I finally saw the light.
Welcome.
All right, Christian, I know I've been here with you before. It's good to be back with you again. But for those who don't know you, if you just take a moment to introduce yourself and what you're focused on.
Yeah, sure, of course, and great to be on the show. Great to be on the panel once again. Thanks, Dean. Good to see you again, David. Thanks again for having me. Yeah, I'm the CEO and founder of the Tribeca Trade Group, which was started about 1.5 years ago. My background is institutional trading. I traded with the Bank of America Merrill Lynch for a number of years. Pretty much anything on the equity floor, including customized indices, ETFs, equities, programs. And I run an all-day trading room. We focus a lot on option activity, but I also look at a number of other indicators. I look at the technicals quite a bit. We look at ETF flows quite a bit, just kind of putting together a lot of pieces of the puzzle that's going on in trading. So and I bring that kind of institutional flavor over to retail traders in our all-day trading room. Thanks.
All right. Very good. Very good. And Mike with Alpha Shark, good to be here with you. Again, I think this is our first time together on the panel, but awesome to meet you. And if you would introduce yourself, what your focus is there at Alpha Shark.
Hey, Dean, nice to meet you as well, and everybody else on the panel. And David, thanks for having me back on. I've been on the Analyze Your Trade a couple times with some of the other guys. So for me, I work at Alpha Shark, and I'm one of the moderators over there. I moderate for about 1 hour and 15 a day. My specialty is technical analysis and option flow, and I like to put those two together to come up with the setups that I think have a high probability of working out. So, I'll take a trade based on technical analysis or based on option flow, but when they both come together, that's when I find I really get the big home runs or the big winners. And so that's what I focus on. So I do an hour-and-a-half modding. I also work with a private Twitter feed and provide all the option flow and the news throughout the day and all my trades. I enter and exit there. And I pretty much focus on directional trades. I'll go long or short depending on the market. That said, you'll very rarely see me short a raging bull market like we've been in for the last year. If it's a short, it's a very quick in and out. You don't see me getting really long. And what I've been doing now is keeping a hedge in place just to keep myself sane. So if this market pulls, I have a nice hedge in place that allows me to play long and stay in there.
All right, that sounds good. Sounds good. So let's go ahead and jump into the report and the forecast for the market. So David's survey, he was saying before the show started, the response was stronger than normal. That 76% of the respondents think the market's going up, and that's a pretty strong, unusual response. And using his algorithms that he's developed and his spreadsheet that he's built out over several years, over 200, he's predicting, his formula is predicting a 67% chance that the S&P 500 will close higher by Friday's close than it opened on Monday's open, today's open, 67%. So we'll see whether the panelists agreed with David's forecast, and we'll go through. And what we're going to do in this first round is just talk about what direction you think. Is the S&P going to open? Is it going to close Friday higher or lower than Monday's open? And what's your confidence on that? We'll get into the reasons, share some charts in the next round. We just want to get you on record here. Which way is it going? And we'll start with you, Rob. Where are we going from here? I think you're muted.
Yeah, I just kept myself muted so you didn't hear all the background noise. Thanks, Dean. I appreciate it. So I'm going to just go out on a limb here. Anytime a large group of people are basically saying that they believe exactly the same thing, and by large group of people or a high percentage of people, I think 78% would be a good number, like we see in the report this week. Anytime that happens, I am just, those are the times where I feel, like Christian said, where I need a hedge in place. If I'm going to be long this bull market, that I would really be irresponsible to not have a hedge in place. And it's these kinds of times when more and more I see that everyone is in agreement that there's not a lot of counter opinions, or those are the times when I'm going to get even more cautious. And I think it's like everybody has said here, it's kind of silly to make a prediction that, and go ahead and short the bull market. That sounds absolutely insane. But I'm going to go the other way. I'm going to say there's no chance that with this many people saying the same thing, there's no chance that this market closes higher on Friday than it opened on Monday. And I have a few reasons of my own that I believe that, but my primary one is if I see everybody doing the same thing, I don't know, that just doesn't.
You're just a contrarian by nature, right?
Absolutely, and proud of it.
All right, so you're saying down. What's your percent confidence on that, Rob?
Oh, I'll go 100%. Why would I be even expressing my opinion if I couldn't? Yeah, but I'm confident that we're going to see a close on Friday that's lower, and we can get into a little bit of that later. But I think we're going to see a close on Friday that's lower than where it opened on Monday.
Okay, 100%. I don't know if I've had anybody at 100% confidence. That's awesome.
I like it. Strong.
Yeah, like I said, if you're going to have an opinion. I remember.
Yeah, it's like if you're gonna, Martin Luther or Calvin or John Calvin said, if a man must sin, sin boldly. So if you're gonna go for it, just go all the way.
That's what my football coach in high school said. I don't care if you're offsides, but you better knock the other guy down. Go full speed.
If you're gonna commit a foul, you better do it right.
That's right. All right, Hima. I hope we're not all going the same way here too. We got to have a little diversity of opinion. But where do you think we're going, Hima?
Well, I actually think that there's a good chance we close higher on Friday than where we are now. But I will put this caveat in. I don't think it's necessarily going to be by a lot. I think this week might have a bit of chop to it. And we could end at, let's say, 2670. I look at the ES. So looking at the ES chart, not the big S&P, 2670 is higher than where we are now, but again, not by a huge amount. So can I do a quick screen share to show why I'm behind this opinion, or we'll do that later? Okay, sure. So yeah, higher. Higher is the short answer.
And one tick higher is a win in this. So what's your confidence on that higher close, Hima?
I'd say like 70%.
70%. Okay. Yeah. No problem. Not quite as strong as Rob. That's all right. Right? It's all right. Okay, Christian, you're up. Where are we going?
All right. Well, that's it. I'm still stuck on the 100% conviction. My head just blew up on the 100%. But I like that too. I like the aggressiveness. I like the philosophy. I feel so weak for saying this, but I do have reasons for it. I would say higher because that's the way that the trend is. So I'm not going to go against the trend. And I know there's reasons. We get to the reasoning and the next question, but I agree regarding the complacency. I think people are getting a little bit too complacent, which worries me. But I'm not going to pick and say lower here. I will say higher, but with a very a low conviction, maybe 55, 60% is my reasoning for that. Stick with the trend. Don't try to figure out when it's going to stop. But I agree. I think we're all getting a little bit complacent.
Okay. Higher, but with some disbelief. How's that? Good characterization.
Yeah, that works.
Yeah. All right, Mike. We got 2 up, 1 down.
So this is where I have to come in and say I don't have a freaking clue anymore what the hell this market wants to do on a daily basis into the end of the week. Are we carried away? I could say we've been carried away since January of last year. It hasn't seemed to really matter to this market. It just keeps going higher. So with a couple of things coming up we're going to talk about going on this week, I'm going to say we're higher at a 50% probability. And then I'll go over my reasons for it when we get to the next part. So
higher at a 50%. So you can say lower at a 50% too, right?
All right, 65. There we go. We'll make it a little higher. But I just, I don't have a huge conviction. I don't think it, and I honestly don't think it really matters what the indexes do here right now. As long as they don't crash.
I hear you. Okay, well, we got 3 up, 1 down so far. And I'm going to go down. And boy, Rob, I liked your bold 100%. I'm tempted to follow your lead on that. I'm going to say 75. So I'm down at about 75%. And I actually have some reasons for that, technical reasons. But the other comments people have made just about complacency. When I start hearing the FedEx delivery person and everybody talking about boy, I've got to get into the market. It's just going up and Bitcoin this, and I just got to jump in. That's when you start. I remember that from the .com thing. I've been around long enough doing this that I remember that all those late comers just kind of had to jump in blindly, and that's when it blew up. So it's starting to feel like that again, just a little bit. But I try not to trade based on what I feel. I try to trade based on the realities. The realities are we're in an uptrend, but I think there's a technical case to be made for the last couple of weeks rally to be running out of steam here. So when I share my chart, I will offer that analysis. But now let's go back around and dig a little bit deeper. So in this round, if you got a chart you want to share, or you want to dig into some technical, fundamental, or whatever means of analysis you use, this is your time. So Rob, come back to you. And why do you have 100% down, man? What are you thinking?
All right. Well, Dean, I appreciate that. Christian, I totally love I want to go back to what you said. I think at the least, having a hedge in place is a must. It's a requirement. But I'm going to go one step further than that. If I'm going to say I'm 100%, so I'm just pulling up my my Robinhood account right here on my phone, and I'm just going to go ahead and short. While we're talking about this, I'm going to short the market. So I'm going to just go ahead and do it. And of course, I'm not giving anybody any trading advice, and past performance is not a necessary equivalent of future performance. Trading involves a substantial risk of loss. I could be wrong, but I'm going to go ahead and put my money where my mouth is. And I'm going to see if I can a chart pulled up here and share with you my screen. And it'll take a minute because I just switched back over to Windows, and I've got this chart here, and I want to see if I can share it with all of you. So,
well, I love I'm taking the trade, man. I'm making a prediction, and I'm taking the trade. I love that.
Yeah, it just like so. I mean, of course I've been wrong 1,000 times in my life, and what I want to do is, if I am wrong, I just want to at least have an exit for that and whatnot. But I've got a chart here. I think I can share this now, and let's just go ahead and give this a screen share on the Hangout. And
so what instrument? What are you going to trade it with?
You know, I like to do the scariest thing possible. So first of all, can you see the chart? Is my screen sharing up here?
Yes, looks great.
Here's my case, technically speaking. So I do trade on the way that I feel, but I often know that my feelings are stupid. So I'm always ready to sort of let it go, as Elsa from Frozen would say. I'm willing to let it go, but so I am basically saying, if the crowd's going one way, I don't mind dipping my toe in the water and giving that a chance to go the opposite direction. But if I'm wrong, I accept it, and I'm not going to hold on to this or turn this into a giant problem. But also, technically speaking, I do a lot of work in correlations for myself, and by no means am I some kind of mathematical expert, but in 17 years, this is pretty much the most reliable type of technical setup that I use. I'll take two financial instruments which tend to be correlated, and then I will wait for that correlation to diverge or disappear for a while. And that's what we've got here on the chart in front of us. The solid black and white candles, which you've all seen 1,000 times, that's just the E-mini. So Hima, I did this in honor of you. I love the E-minis. So there it is. That's the E-minis, and it's basically a rocket ship. It's a straight shot upwards. It's a gigantic trend. Anybody that shorts that trend is a dummy, which I'm just about to do. In green, that's the Australian dollar, Japanese yen. And as a currency trader over the past 17 years or so, what I look for technically is for two currencies that are typically going to move together with each other to diverge, or for that correlation to break down. That's exactly what the Australian dollar, Japanese yen is highly correlated to the S&P. And as you'll notice on this chart, the S&P 500 is a rocket ship, and the Australian dollar, Japanese yen has been channeling or sideways or hasn't been going with it. So what has to happen now is either the Australian dollar has to significantly appreciate, or the S&P 500 has to at least end the week, at least. It just has to come down off of this bizarre and gigantic trend. And what I'll usually do is buy one instrument and short the other and meet them in the middle. Now, I know there are pairs traders, and there's the whole books written about this with mathematical formulas for Squire paired and the Pythagorean theorem. But what I'm just basically doing is looking at stuff that's usually highly correlated, wait for the correlation to break down, buy one instrument, sell the other, and wait for those two instruments to sort of converge or come back into a correlation. So this divergence of the correlation, this just tells me, technically speaking, it's okay to dip my toe in the water and short this market here, and maybe stay in that trade until Friday, and maybe at most take a risk of losing 1 or 2% of my capital. So just take a 1% loss on a chance that this moves back down to some of these longer term support levels, that's too gigantic of a move. So maybe I'm just looking for that to fall a quarter of the way, maybe just a slight retracement, but that's my technical backup. And it's the stronger case that I make for why I feel so confident in this. This is just, these correlations don't end permanently. Eventually the statistics take back over again. And so like I said, so I'm gonna jump in here. And so, the vehicle that I use, I like to just use a highly leveraged vehicle to do this. So I'll just buy like the SPXU, and I'm not going to hold on to it for a long time. I'm not worried about the decay or anything like that. I'm just going to make basically a directional bet. And then in my other account, I will buy the Australian dollar, Japanese yen as sort of a hedge against that.
All right. You do have a reason, don't you? You said you did.
Got a reason for almost everything that I do. almost everything. And so I'll try to remove my screen sharing here. There we go. How do we get rid of the screen share? There we go.
Yeah, it's a button. One of those buttons, you push it.
There we go.
All right, Hima, you were up at a 70% confidence. So do you want to share a chart or talk to it? Kind of walk through why you're making that prediction.
Okay, for sure. So first, thank you, Rob, for honoring me with the E-mini chart. I appreciate it. And actually, you'll see in the couple minutes that you were sharing, I went ahead and did a quick analysis on Aussie yen. So let's see what two chartsters, both think of this. So I'm going to share my screen here, and you guys should see a chart now with a bunch of pink and blue lines. Is that what you see, Dean?
Yeah.
Yes. Okay. So this is the chart within my TradeStation window that I published off of this morning. That's why this blue line here that I had as resistance is being traded through. It's not that I'm not keeping my charts up to date. But part of why I had to give the answer I did earlier is because I got to stand by what I publish by 9:30 a.m. So I'm showing you guys now, it should have switched over. We're inside my members portal for people who get my newsletter. And I'm going to get to the big picture. I'll go to the daily chart, but I want to share, I don't know if you can see the font. I'll try to zoom in, but the outlook I had this morning was that based on a couple different things going on, which I'm going to detail in the daily chart, blah, blah, blah. The outlook is for renewed strength. And this is, again, for today. My subscribers care about day trading, and they do trade options on S&P and related instruments, but they really just care about what I think for the next 24 hours, essentially. So the outlook is for renewed strength, for a retest of the contract high initially. Then I have, if it gets through that, push above towards projected resistance. So for those of you who don't know me or my background, I am a GAN specialist, you could say. Expert, that's way too big of a word. Maybe I'll be an expert when I'm like 80. But I guess I'm a GAN specialist. And so I use projections that are GAN numbers, not Fibonacci numbers. Nothing wrong with Fibonacci's. There's actually a lot of overlap sometimes, but that's where this weird 2684.84 comes from, because the E-mini trades in 0.25, 0.50, 0.75. This is obviously a funny looking number. So that is the simple answer to why I answered as I did. And as you can see, so this was the chart I published in the morning, right? This level we weren't close to it, but now it's trading through it still. And so I figured, hey, if I was on the ball 4 hours ago, I may as well stick with that direction. But looking at the daily chart, now this is something for anybody watching who is came to this event after hearing about it from me. You know that I'm very protective of my ES charts because I have a lot of stuff on there that I only share with subscribers. But I'll tell you this. So on the bottom, I've got the RSI. It's called RSI power zones because it's just not your everyday way of looking at the RSI. I could spend a lot of time teaching about that, but the key thing here is you see these yellow lines that I have drawn on. The rally off of the Thursday low, was it, or Wednesday low, that RSI low has a symmetry to two RSI lows from the end of October. So I look at momentum almost at an analytical point that I look at price. So to me, this is a market symmetry of support, and there's a good chance that RSI wants to improve. However, as you can see with this gray dotted line, there is potential resistance overhead on the RSI, which might suggest that we're in a situation where we get a push above the contract high, like I was talking about. ES contract high for the March 18 contract that we just rolled to is, call it 67.25. And I was saying before how I see us going maybe to 64.84 on the chart. So I hope you guys can see that this 162.5% projection is where I see things going if we got some sort of acceleration today. But a lot of this is because of this channel we've been in since the middle of middle of November, in line with the fact that this channel, the November 15th low, held at a prior trendline resistance that I had. So a couple different things showing me that the November 15th low was significant and that we're still kind of in a run up from it. But as I said, I don't necessarily think that just because we go higher, we go a lot higher. Something to say for, Santa Claus rally, but the timing of those isn't always, days before Christmas. It could be just right up into it or lagging into Boxing Day or the post Christmas into New Year's period. So I think that states my case pretty well, and I hope you see where my 70% comes from with that.
All right. Well, very thorough. Thank you very much, Hima. And now on to Christian. Make your case for.
Yes, sir. So yeah, and I'll kind of just piggyback off of what Hima said, which I agree. And I'm not going to. I was going to share my screen, but I was just basically going to show the RSI, and I also think we're running pretty hot here. I've got a trend line up here too, which I just think the overall S&P is getting hot. Now, remember, my answer was that we would that we would go higher for the week, but my conviction at this point is starting to lessen just in the very short term. This market has just been amazing in terms of picking stocks, and as when I come on here. And I'm on the panel, I talk about kind of the same thing, and just saying, the S&P, it could grind a little bit higher here, so be it. But really, just the opportunities within stocks inside the S&P 500 or in small caps or in NASDAQ has really just been unreal. There just continues to be other opportunities besides besides trading the indices, which I view, small caps have been a little bit exciting in the last couple of weeks, but the S&P is really boring in my opinion. So I do look at things just like I look at where the VIX is. I don't trade the VIX. Nor am I trading S&P futures right now, because with implied correlations as low as they are right now, it is such a stock pickers market. In my 18 years of trading, I don't think I've ever seen a market like this that has been so geared towards stock pickers. Just unbelievable. So I look at the S&P every day. Of course, that's the major index, and I want to be mindful when it's overbought, which is where it is right now with a 75 RSI. So I begin to take on less positions. I do more profit taking in some of my swing trades that I have on now. Last week was a great place to add longs in the technology space, but also with the VIX, which I don't think anybody has brought up yet. We've got a big week of events, right? We've got a Fed meeting this week, which it's priced in that they're going to raise rates, but the language is I think is what everybody's going to be tuned into for how many rate hikes in 2018. And then also this week is quadruple witching, which also you don't really hear too many people talk about. So one of the things that I track, of course, is index rebalancing, which all of the major indices, they rebalance on Friday. So there could be a little bit of volatility in single names this week. Could be some whippy action, but the VIX right now, we're a 950 in the VIX, right? I mean, we were a 14 a couple weeks ago, we spiked up to 14. So now I think, as we've seen this a couple times now, once we duck under 10, it's a great place to take some targets. So I don't know if that's going to be this week that we get a little bit of volatility. Maybe it's next week, but I just more conservative this week with that VIX trading down below 10, where basically anything could cause a little bit of volatility at this point. Different than where we were a couple weeks ago with 12, and with the VXN, which I track a lot, which is the VIX. I mean, look at this thing. The VXN, I guess I should be sharing my screen, but if you bring up VXN on your screen on the daily chart, this was at 16, 17 last week. In a matter of 3 days, it's gone from a 17 to a 12. Again, that's the VIX for the Qs. So completely different than the regular VIX, but I mean, from a 17 to a 12, and again, down by the by the year lows again. So that's my stance. I think it's a great place to kind of take a little bit of profits and then set up for when we get have that cash. As one of my subscribers routinely says in the room, you have to have cash available when that dip does come. It's the worst thing in the world when we get a dip and you don't have any cash on hand and you can't take advantage of it. So that's my stance for this week.
All right, you guys do have reasons and passionate reasons at that. I like it. All right, Mike, you said up 65%. Want to elaborate on that just a little bit? Share a chart if you got one.
Be happy to. So hopefully my screen's coming up right now. So
yeah, looks good.
So this is just a chart of the SPX, and just kind of keep looking at it. And you can see that we haven't been able to get a 3% pullback in this thing all year long. In fact, this little dip to the 8-day, which I love to track the 8-day, was so aggressively bought. And now we're almost all the way back to the all-time high in the market. I mean, they're just not willing to let anything go here. And when you look at this week, we have a bunch of catalysts to move things higher. So the first thing we have is we actually, we talked about we have the Fed meeting coming up. They're expected to raise rates, and I think a lot of it does depend on the language, which I expect to be somewhat hawkish at this point moving forward, given how well the economy is moving. Right. We also have huge oil numbers that come out on a Wednesday as well. And that's a sector they really haven't played hard in this market. And if you look under the covers, why the indexes have stayed up all year is there's this rolling barrage that they go beat down sectors and names while keeping the index up, while buying specific stocks or specific sectors. So right now, the financials are taking a breather, and we're seeing some of the laggards today taking off, like Twitter and Snap and VRX. And then out of nowhere today, Apple woke up and broke this big downtrend. And when Apple's in play, the markets tend to be really, really strong. So you look at this chart and say, yeah, it's heated. We're overbought. We're a little heated here. But you have catalysts to move things forward. Then you have options expiration on Friday. And these guys want to get their money back. So they're going to pump these names up to get their options so they can roll them out. So you put this all together, and you have to set up, barring news, for a pretty strong week. And oh, yeah. Trump just said he's going to start working on his industrial package for next year, and he saw all the steel stocks and some of the industrial plays start waking up at the end of last week into today. So there's a lot going on there. So when I look at this chart, I think it's likely they're going to try to take out the all-time high and then set up for a grind into the end of the year. I'm not saying we don't get some weakness and pullback, and trust me, I was hoping today we'd have a red day, today and tomorrow, into the Fed meeting, give us a nice buyable dip, and it just wasn't in the cards. The other thing I want to do is bring up the VIX, because I know Christian brought it up too. The VIX is just telling us there's no fear in this market at all. We hit 938 about a half hour ago, the lowest ever, I think, on record. New low on the VIX. By the way, I'm hedged with VXX March calls, I think March 50 calls. And I may even go add to them now that we came down this far, just a little bit more here, because they've been decreasing in value, which I don't care. My idea of a hedge is it should expire worthless at some point. That means I did a great job. But I look at the VIX. There's no fear in the VIX. I look at all the buying in the options market. Other than select names, there's no fear. It's nothing but bullish. And by the way, the big guys are hedged out the wazoo. If you look at every day, the amount of puts versus calls bought on the indexes and the VIA and the VIX, it's 3-to-1, 4-to-1 of puts to calls. They're so hedged, they're not going to sell this market off with everybody hedged up, because if they did, they're going to have to pay them. And we know they hate paying people on the downside. You have to kind of get lucky with it. So, yeah, I think there's to be some chopping around. It. Maybe tomorrow we get a little pulling, but I think the markets are set for a decent chance to close at all-time highs on Friday, and then we'll see if we can get a little weakness next week to set up the Christmas rally at that point.
Okay. Thank you, Mike. Pretty detailed review there. And you mentioned the Christmas rally. I think mentioned that too. I'm a little bit bearish. I think the Grinch might steal the Santa rally. But we'll have to wait and see. So I'm showing my chart here. I've got the E-mini on a 30-minute chart, and I use a combination. I call it East meets West. I use a combination of Elliott Wave and Ichimoku Cloud, kind of blend them together, two independent systems, and when they agree, that's pretty powerful. And what we're seeing here is, from an Elliott Wave standpoint, we had this big impulsive move up, a correction, and it tried to do a continuation of that trend, and it is running out of gas. If you look at my momentum indicator down here, right, this previous moves had a lot more momentum, and we are running out. So I think this continuation is going to fail. Now, it is above the Ichimoku Cloud, and that's why I wasn't 100%. If it had been under the Ichimoku Cloud, I'd be saying 100% down. But I just see a complete loss of momentum over the last handful of days. I like the 30-minute for kind of a weak look at the chart. We had this big run up, and I think the market's also poised. I thought your Mike, your put to call ratio was interesting. I think people are guardedly optimistic, but ready. If there's bad news, I think the move down could be pretty rapid. So I'm trying to be hedged and ready for that. And again, I just see you know, from a current reality, that the current move up, you know, we're coming up against the all-time high intraday price, and it is stalling. It is not got any kind of momentum heading up toward that that I can see. So I think we got a good chance of it heading down. And Christian, I liked your comment about, you know, it's a stock picker's market. You know, I haven't traded an index instrument in a long time because I think there's better plays out there on you know, rather than try to trade an index. And I'm not a day trader, right? I'm in trades 4 to 6 weeks on average. So you know, the indexes are in a very mature phase of their trend, and I'm not interested in trying to chase that. So I'm looking for, you know, new breakouts, new corrections, individual stocks, and having some pretty good success with that. All right, so good stuff, good discussion, and I enjoy the passion that each one of you brought to your analysis. It's pretty good stuff. Let's go ahead and move on to the next question, and that's going to be where you share a trade that you like right now. So, you know, what do you like? You know, whatever you trade. I know, Rob, you're a Forex guy. Hima, you're a day trader for futures, the E-mini. Christian trades everything. Mike's into options. But what do you like? What's your favorite trade right now? We'll start with you, Rob.
All right, let's see if I can pull up my screen here. And
so I like the trade I just put on in front of you guys, right?
Exactly. All right, I need to share my entire application, when like the whole entire screen. That should be working. Then jump on over here to Trading View. Go full screen. You see that all right?
Yes.
All right, great. All right, so I like the dollar yen. Dollar yen's also highly correlated to the indexes. I find that when the momentum is really strong, that's when the pullbacks end up being really volatile as well. I don't see as much of that momentum this week, so any pullback, you know, of course, to me, it would be gentler, kinder, less volatile. But I like right now, I like short dollar yen, short dollars. That's a tough one. That's a tough one for me to do in a week where the Fed's probably, like I said, going to go on the hawkish side. So this, you know, if you're talking about where my convictions are not as strong, this would be it. I'd rather be short dollar yen than long dollar yen. And it wouldn't be a really big trade. You know, I would be looking at like a 50 pip move, which, you know, that's not a really significant move. I would expect it to be more gradual than sudden. And I would certainly not want to stay in above the highs. I'm perfectly willing to be wrong about that. But this is, it's got all the stuff that I look for. It's got all the things that I want to see when a short trade sets up, but it's just a terrible week for this. It's just there's so much stuff going on that I didn't even think about the infrastructure plan stuff. So, I mean, anyway, so I'd rather be short than long this one. This is what I'm looking at right now. I haven't put this trade on yet. I'm going to wait for this to break through today's low, and if it doesn't break through that today's low, 113.20, I'm not going to take the trade at all. Whereas I do have now, I am long the SPXU, like I'm long the shiz out of that now. So, but I'm not going to take this one yet until it breaks through the lows. And if it doesn't break through those lows, then this trade can just go shove it. I'm going to forget about it. I'm literally just going to wipe it off my screen. If it breaks through the highs, I'm not even going to worry about it. But if it does break through those lows from today, I'll short it down to right here, this purple line you see on my chart. That's just the monthly pivot. And I would short it down toward that level. We get halfway the distance there. I might take a little bit off of it. And that would just be a swing trade, maybe something I'd be willing at maximum to stay in for about a week. But with all this craziness, this is a really big week for news. Probably don't even, I'd be happy if this never opened.
I like that.
Yeah. Never lost any money taking 0 trades. So
I hear you. I hear you. Okay, that's pretty interesting. And I like your approach to you know, a qualifying price level. I do that a lot, right? I'll get in if this final criteria is met.
Yeah, like let it tell me. I loved what Hima said too. It's the same concept, right, Dean? She said, "Listen, I got to see it go down for sure." You said, Dean, it's got to go into the cloud. Like if it's not in the cloud, then this thing, then I'd be all over it. So I've got to, I got to let the market tell me what it's doing. Like when it comes to this stuff, and all this stuff, by the way, is just going to happen robotically for me anyway, because there's no way I'm going to sit in front of the screen and wait for any of this to happen. So the robot's going to take a trade if it breaks the lows, and then it's going to add to the position if it's a winner. But it may never even open that trade at all.
Yeah, very good. I like a couple times you said, I might be wrong. I've been wrong a lot.
Yeah.
And I think you implied in your conversation that it sounds like you got significant risk management strategy in play. So, we're going to be wrong once in a while. If we can make the losses pain-free, right, and have a good payout ratio, so the winners are, proportionately big, 2 or 3 times the average loser, that's fine, right? You can have 50% win rate. If you're a 2-to-1 payout ratio, you're a profitable trader.
Yeah, exactly. I certainly haven't staked any part of my career ever on being right most of the time. That just doesn't. That's never worked for me.
Yeah, just need to be profitable occasionally, right?
Yeah, right. I gotta keep at it, stay focused, keep at it, stick with the system, and kind of let the results take care of themselves over time.
I kind of like your, it's robotic, right? I'm going to go for a walk and maybe get a text message. Oh, look, I'm in the trade. Awesome.
That's exactly right. That's the other thing. Part of my risk management isn't just where my stop is and where my profit target is. Part of my risk management is I know I'm a terrible discretionary trader. I am just prone to do all the things that you're not supposed to do. And so I just plugged the logic in and I let it just run automatically, and then I manage it. So I manage the workforce. I don't go make the hamburgers. Like I don't do that. Whenever I get involved in that, that's where everything goes wrong. So yeah, 99% of the time it's just going to be a robot taking the trade. So I can't add too much, go in too big, jump out too soon, all those kinds of things that I used to do all the time.
Awesome. I like it. All right, Hima, what do you like right now?
All right, well, let me share my screen to paint the picture, since it wouldn't be any technical analyst worth her salt if I didn't always go back to the charts. Do you guys see it's a black background now? It's got Apple and a bunch of A, B, C, D, E.
Yep.
Okay, so Dean, I heard you say, and I jotted it down because I liked how you called your approach east meets west. Was it Elliott wave plus Ichimoku clouds? That's an interesting approach. Just to clarify with everyone here, my ABCDs here have nothing to do with Elliott wave. I know Elliott wave well. I had to study it deeply for the CMT exam. So it's just me using simple letters to mark off the key advances and declines from which I drew Gann projections. So this is Apple on a weekly chart. And because it's a stock and there's no contract rolling and stuff I have to really worry about, I can do this type of long-term analysis and just see what happens along the way. And I'm going to zoom to the more recent price action, and then show you my daily chart. But you can see how some of these projections are very useful along the way in calling tops. For example, in May of 2017, we've got 155.75 was the projection that was sitting out there for me for months. The high was 156.42. So I would think that for a projection that's, months and months and months, a couple of years even old, that's pretty nice that I can have that sort of roadmap out there for me. So with the most recent price action, you can see we've been consolidating between this 178.82 and 178.14 band. Now, taking this over to the daily chart, this gray vertical line is October 23rd. That's the last time that I had a lot to say to my the HimaReady.com family, as I say. Anybody who gets my free updates is just on my general list. I told my husband I'm going to be late to sitting and having dinner with him because at 7 p.m. I needed to send out a FANG video update. Closed the door, ignored him, and I recorded this video on all the FANG stocks, including both the A's, Apple and Amazon. And I said, guys, I know that there's some weakening momentum on, let's say, the MACD or something, but I really think that we're at key support 155.02, which happened to be exactly the low of a recent day, even though it was a calculated support. And I said, watch out, I think we're going to move higher from here. I'm not at all touting this as one time when I was right, and that's why you should listen to me. I'm just showing you the last time I talked to anybody besides myself about this market. So last week, I had a group that I was presenting to. So it was a few days ago, and I told them December 11th, which happens to be today, is a key timing date in Apple. How I do market timing, there's a lot of different ways, but for the beginner, I just tell them the date, and then we can go back to why it got to be that way. And I think it was Christian who mentioned earlier how Apple is kind of breaking out of its recent daily downtrend today. So this falls in line with me suspecting that today would be like a high energy moment in Apple. And you might think that I'm sharing Apple because of obviously its role in the S&P and therefore the E-mini S&P. That's part of it, but it's also just a stock that a lot of people do option plays and things around. So I wanted to share a varied example. And I think there's a good opportunity here if we can continue above and sustain above the December 4th high. So that is 172.62. If you can close above that, then that would be great. And you could enter by tomorrow by buying the close of today's session if you're trading Apple at this kind of level, or doing an option play that would mimic that, buying the midpoint of today's range. That's another one of my favorite entry approaches because it cuts your risk down, but there's a good chance you trade through the middle of the prior days or prior sessions range. And as you can see, I have these two bands of projected resistance that encounter this upper channel line. So I still think that 178.14 to 178.82 is a pretty important resistance. And then beyond that, if the market does fly through that, I'm not calling it to, but if it does, hey, then the next band of resistance is 188.76 to 189.34. And these numbers, a person could look at a couple weeks, several months from now, and they still stay intact because they only change if I get a reversal back below the lows off which they were calculated, or if I notice that they're not working anymore. So as you can see, the lows that anchored the 178.14, for example, that was back from 2009. So if for some reason we're trading back at 2009 levels on Apple, I have much bigger problems to consider than just my GAN projections being moot. We all would, right? So that's my scoop here, and I think this is a great opportunity. And I know it gets, again, a lot of different ways that people could take advantage of what's going on Apple, whether it's looking at the index futures or doing option plays directly on it.
All right. Long on Apple.
Yep.
All right. Very good. Christian, what's got your attention? What trade do you like now?
Yeah, and for some reason I'm getting a lot of credit on this. I keep hearing my name. I did not say Apple, but I do like Apple here. But I'll take all the credit. That no, I'm just kidding. Yeah, so I think Apple's interesting here too. So I cannot believe we're about 45 minutes into this and no one has mentioned Bitcoin, which has been just all over the place the last week. You can't turn on CNBC at this point without them having debate, so on and so forth. So I will do my part and mention the Bitcoin in this webinar. And what I've done is, so this is a little bit something different. Thank
you for that, Christian. Now you make the whole panel sound pretty hip. We're talking about Bitcoin, right? So we're in. Nice.
So what I've done is I've put together an index that is solely based on equities, not the actual currencies, but cryptocurrency and blockchain companies. Anybody that's involved, and I really haven't shown this to anybody except for my members. But you could basically see this. This is composed of. I just added 2 companies over the weekend, but this is 24 companies. If you like momentum and something a little bit different, then this might be something for you. But this is how the whole index trades. Right now, I believe there's 4 ETF companies that are trying to get approval, not besides Bitcoin, which everybody is trying to roll out, but they're actually trying to roll out blockchain indices as well. Just like this idea, companies that are involved, that have a stake or have just entered into the business. And you could see the performance of this. It's kind of similar to Bitcoin. I could actually draw Bitcoin in here as well. And you could see that the companies are basically very hot, as well as Bitcoin itself. Bitcoin has obviously gone up straight in a line, but so have the companies. So when you look at the members of what I've put together, it's like I said, 24 companies. I've got some chip exposure. Names that are involved in the mining. And then I've got a couple companies like that are holding the cryptocurrencies. I've got the CME. I've added SIBO in here, which is not on my spreadsheet yet. SIBO and CME, which are now listing futures. SIBO last night, obviously, and CME this weekend. I've got some exchange stocks where they're accepting Bitcoin now, which Overstock is doing that. Square is doing that. I've got some companies just specific to the blockchain, which is Riot, and I've got some other companies as well in here. So there's until we get an ETF, which will be covering this, the best way is to really kind of have little. Have a portfolio, I would say. I'm not recommending this, or I'm not saying you need to go out and purchase these companies, but having a little bit of exposure to these companies and kind of doing it in small amounts. I mean, this company Riot, another one DPW. I mean, these things really have a lot of momentum to them, but they're very volatile. So if you could kind of put this together as an index, so trading it as an ETF. You have a little bit less exposure to each individual name. So you could do that on your own until there's an ETF that comes out. And the best way to kind of do that, there's different platforms where you can actually kind of build an index. I think Motif Investing is one where you can kind of set up a set dollar amount that you want to put into a bunch of different ideas. But the group really has momentum. So that's what I've been working on the last couple of weeks and trying to catch some of this momentum as it occurs. And and then just making sure that you're waiting in some of these names that are more volatile. The CME was a name that we hit really big in the trading room the day that they announced that they were going to start trading Bitcoin futures. So things like that is where I've been focused on adding a little bit of money to. And then for those who are looking for something a little bit different, just more traditional. There's been a nice Twitter call buyer this week, and it's another area that one of my favorite chart patterns is when you have a long base, you have a long decline and a long base, and just trying to start to get to that edge of that breakout level, and we're certainly seeing it today in Twitter calls where they've gone out aggressively a couple times, not even that far out. Some weeklies, some Januaries as well, some January 22nd, so not this week, but next week. I always tell my subscribers that, as we read activity on the tape and see aggressive option flow, you don't have to take this week's or next week's calls. You could structure your trade any way you like. If you want to just buy stock, you could do that. But this one's definitely on my radar. I'm in this one and looking for a further breakout in it. So there's a couple ideas.
Okay, that's awesome, and I really like your crypto, roll your own ETF idea. It's pretty interesting.
Thank you.
And that pattern you showed on Twitter, I love that pattern. In fact, the one I'm going to share here in a minute is almost identical. I just loathe chasing a trend. Something about the way I'm wired, I hate it. And so the Bitcoin and the cryptocurrencies, if they have a nice big correction and turn back up, I might get interested. But I hate getting in at the top of a market or at the bottom after a long trend, trying to go short. Don't chase trends. That's my thing. But Mike, it's not my turn yet. Mike, what do you like right now?
Well, I want to talk about Twitter too. So Christian stole a little of my thunder. That's okay. I think there's a lot to talk about here. So Twitter's a name I've been getting my subscribers into now for the last couple of weeks. So to me, this name completely changed on earnings day. And I have this chart opened up right now because what's important to see is this big gap that has yet to be filled on this chart. So there's a lot of air once it gets now above the recent high here of this 2247 area. And what it did is on earnings, it had a beautiful move, came in, held the 21-day, put a new high in, came down, put in a lower low, a higher low, held the 21-day, and today we got that move up. And now we have pretty much an open air pocket all the way up to just over the 24 area on this chart. And what I love about this, and when you bring it in here, you can see it, it woke up today on option flow. So I've been sitting in the March 23s for a couple weeks and was a little bit underwater. And today they came in and just absolutely lit up December 22nd, 20 calls, 16,000 of them traded. Most of those traded early on this morning. They were bought. There hasn't been too many of them coming in and selling them at that point. I added to my March 23s. I bought January 20 calls. By the way, I'm a big believer in not playing weeklies and options or avoiding them unless you're just going for a very quick momentum scalp. You get caught in them, you hold them overnight, the decay will kill you, they'll come apart. The market makers love to absolutely play with the spreads on those things. They don't like to let you in or out easily. When the minute it pulls, they'll widen it. Stay away, buy time. If you have time, you can adjust. You can make changes to your position. You know, somebody's asking me why March 23s. Well, March 23 gets me that gap fill and gives me time to play with it, to do things with it. I could sell calls against it at some point, turn it into a call spread at that point if I get to my profits. I have a lot of options there at that point when I have time with it. So that said, Christian brought up they were buying other strikes. They've been going all the way out into April. There have been March call buying, April, January, December's, all over the place. So the point is they want Twitter here. And to me, this is a different looking company. They've been accumulating it through this area. They keep coming in, they keep buying it. There's been no real big news on it, which I like as well upon the name. And, you know, it doesn't have those huge moves, but you can play with it. Now, I did get stopped out of my John 20s while we're sitting here talking. Once I get a decent profit on it, I was up about 35 cents. I put a stop in at up 20 cents. So I got knocked out of my Jan 20s just about 15 minutes ago while we're sitting here talking, going over this. But that's okay, because you know what? I took a profit on it, and I'll go back in tomorrow if there's any kind of dip, and I'll buy it right back. So yeah, I love this chart. I think it's ready to rock here, and it's different. Since earnings, this name has been acting very different. When you look at this, how bad this name's acted, other than this rumor period, we have, remember that Salesforce was buying them multiple times, and then there was a bidding war with Disney and everybody, and they were turning down offers of 30 plus. I mean, who was going to pay $30 for Twitter when it was trading at like $14 or $15 just a couple sessions before that? That was just nuts. So now this is a little bit more real. There's a change in the company. They're actually getting profitable. So there's actually fundamental reasons. Did I just say fundamentals? I think I said fundamentals with Twitter. There's actually fundamental reasons to get involved. And by the way, if you're looking for a buyout, companies get bought when they have a reason to get bought, not when they look like complete another garbage. Twitter actually is starting to show reasons to get bought now. So for me, this is a long-term swing, and at least until it gets up to this 24 area. And that's
all
it.
Right. I like the Twitter chart as well. I'm showing Valiant, and this is one I like right now. So I got the daily chart, VRX, and this thing, if you put some more data on the screen, right, this thing came down from over $260, and then it was the poster child for a while during the last year's presidential campaign. For some folks anyway, for corporate greed and overpricing and whatnot, all that kind of stuff. I don't care. What I see is a wonderful basing pattern, and then a nice breakout, a really nice breakout. We were looking for it to break this previous high here. And last week it did it with vengeance. We were able to catch an entry at 1940, and now we're up over 4% again today. I got a price target of 31.02 just before this previous high, but this is a corrective wave trade, Elliott wave speak, right? If this is a correction to the big move down, so this is a Elliott wave 4, and the actual retracement is a lot higher. I've just got an intermediate target set here at a pretty significant potential resistance point. But if we took an entry at 1940 and it only gets to 31.02, it'll be a little disappointing, but I'll live with it. The hard part with this is going to be it's going to be volatile, right? We got a nice rocket move here. I saw your ABCDE Hima on your chart, and I know you said that's not Elliott wave, but what it looked like you had was these key pivot points, right? And I use Dow theory in my trading, knowing that uptrends move. Right? They don't go straight. They move in higher highs, higher lows, higher highs, higher lows. And that's what it's doing. And so, after a sharp move like this, we're going to pull back to a higher low before reversing into new higher highs. And so the hard part is to sit through those and have confidence in this. But everything looks good. The nice bottoming, the new highs being put in off the bottom, growing momentum above the Ichimoku cloud, above the 200 SMA. Rock on. This one looks good. I like Valiant for long. And my approach to that, I think a little bit similar to you, Mike. Trade like this, a directional trade, man, I'm just going to go buy calls. Deep in the money, high delta, plenty of time. I'm not going to, I'll be out of this thing long before the final 30 days of the contract. Just far out in time, high delta, deep in the money, and let that thing run. That's how we're trading Valiant. Like it a lot. I'll throw in one more quick one. It's another fun one that we got into. Fitbit. And this one's kind of similar. This one's coming right up off the bottom. And we took an entry at 681, up 4% today. So this one's starting to rock as well. So really like Fitbit. Again, very similar pattern. So there's two trade ideas, Valiant and Fitbit.
Hey,
we're right up against 11 o'clock. Yeah.
Yeah, I was just going to add, I mean, even what's nice about some of these ideas is you could play these with both options or stock. I mean, they're low price stocks. I mean, Valiant, Twitter. I mean, these are names that you could do. You could have combinations of the two. You could just do outright stock too, because the price of the stock. So
I agree with that. And like I like to do sometimes is just trade common off the option momentum. So like Roku, when the call supers came forward, I grabbed 1,000 shares and was out about 60 or 70 cents later. Just a quick little scalp, get in, get out, and be gone with it. Trade off the option flow.
Absolutely, absolutely. And once you've got the chart analyzed, right, you've got a good setup to meet your criteria. There are 1,000 ways to trade it, but what you need is a high probability outcome, right? And I think that's what we got here. Well, we're up against 11 o'clock here Pacific time, so we need to go ahead and start winding this down. What we'll do is go back around the panel one more time, and if you've just got any kind of last closing thoughts and any kind of a link you'd like to send people to, some kind of newsletter or something, now would be the time. So we'll go back to you, Rob.
Rob had another call he had to go to, but you can find out more about his work at robbooker.com, and he has a free indicator on his website that you can everyone can go download.
Okay, that was fast. Hima, closing thoughts from you?
Hi, I'm still here. Sure. I don't know if you guys can see my screen still, but I just typed the link that you can go to just join my general, like I said, HimaReady.com family, where I will share updates each week on Wednesday, a couple different varieties, but HimaReady.com/free. So HimaReady.com/free, because this is the free stuff. And now I've put up the page that will actually show up when you go to that. So HimaReady.com/free, you'll see a couple bullets about what's included in the weekly Wednesday updates. So hope to see you there. If not, good luck out there. Happy holidays. And maybe I'll see you back on the show soon.
All right. And kudos to your copywriter. That's awesome.
Oh, thank you. Actually, I came up with the skinny dip part. My marketing team was pretty impressed, but they came up with the rest.
Very nice.
Thanks.
All right, I'll let it go. I'll just let it go. Christian, any closing thoughts from you?
Yeah, sure. Yeah, I do offer a couple-day free pass to our trading room. You can just visit us at tribucketTradeGroup.com products, and you can hit the contact button and just send an email if you're interested in checking out our trading room. And I do offer the components of that index to members or to trial members as well. So again, thanks for having me on. Always appreciate and love being part of the panel. So thanks, David. Appreciate it.
All right, great. And good to be here with you again, Christian. And Mike,
Same here.
Closing thoughts there.
Perfect. There's my screen. Thanks again for having me on, guys. And I do want to wish everybody happy holidays. My advice for the rest of the year, don't trade big, trade small. If you've had a great year, you don't want to give it back. If you haven't had a great year, you're not going to make it back in the final 3 weeks of the year. So just try to take small wins and get yourself better set up for next year. That said, if you want to learn more about what we do, visit us at alphashark.com. We have chat rooms there. We're actually opening a chat room on Bitcoin. We do options. We have 2 different chat rooms going in all different types of training products. If you want to learn more about me, You can look at me at smartoptiontrading.com. And if you hit me up on Twitter at OptionsMike, I'll send you a discount promotion to get in there for basically a very inexpensive 1-month trial. Thanks again for having me, guys. Appreciate it.
Awesome. Good to be here with you, Mike. And again, I'm Dean Jenkins, followmetrades.com. This is my website here. We've got the trading performance track record published here, details of every single trade at these buttons here. Believe in complete transparency. And a good way to get to know me and my service better is just to take free newsletters. Every week I do a market update beyond the noise. And so you can just sign up for free there. Glad to have you join in and check it out. Okay, well, hey, it was great to be here. I appreciate, it was good to get to know Rob and Hima, and Christian to be back with you, and Mike to meet you. So I think that is it, and I'm going to turn it back over to you, David, to wrap it up.
All right, thanks, everyone. For everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, be sure to join us tomorrow, December 12th, 9 p.m. Eastern Time, for Analyze Your Trade. That's where everyone submits trade ideas and symbols, and we talk about as many of those as we can get through. Dean here helped me develop that show, and we are up to episode 15 now. But Matt Buckley will be hosting tomorrow night. And also Michael Filiguera, Lance Cipolito, and John Thomas will be on. And just want to thank all my guests again for the show. Rob Booker of robbooker.com. It was great to have him here for the first time. And Hima Reddy of himareddy.com. Great to have you here for the first time as well. And Christian Fromhertz of TribecaTradeGroup.com. And Mike Pisani of AlphaShark.com. He's been on the other show a few times, but Mike, good to have you here on the show as well. And Dean Jenkins of FollowMeTrades.com. Thanks, everyone.
There it is.
Okay.
Thank you.
Thanks, Dean. Thanks, David. Take care. Bye.